Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. The key economic report yesterday, US Q4 GDP, came in at 2.4% versus 2.3% expected. However, three major agencies, Moody's, Fitch Ratings, and S&P Global, warned of a potential downturn due to restrictive tariffs, and the Congressional Budget Office lowered its growth forecast for the current year to 1.9%, while also predicting inflation stabilization. As a result, the euro rose by 60 pips, reclaiming the technical level of 1.0762. This confirms that the dip below support on March 26 was false and indicates a more serious reversal than what we saw 2-3 days ago. The Marlin oscillator signal line on the daily timeframe has not yet returned to positive territory after exiting it on Wednesday. Marlin will re-enter the growth zone once the price surpasses yesterday's high at 1.0822. That would be a signal for a move toward the 1.0955 target. A breakout above these resistance would open the path toward 1.1027. However, if the price drops below yesterday's low of 1.0733, it may not stop at the first support at 1.0667, as the market is teetering between two fundamental narratives: the brewing crisis and capital flight into safety with potential Treasury QE support, and the re-emergence of risk appetite of the next quarter. On the 4-hour chart, the Marlin oscillator signal line shortly reversed from the lower boundary of its range and is now in bullish territory. The balance indicator line halted yesterday's price surge. A move above yesterday's high could also push the price above the balance line. It's a red line on a graphic. The primary scenario remains bullish. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 85 pips, which is considered as moderate for this currency pair. On Friday, March 28, we expect the pair to trade within the range bounded by the levels of 1.2867 and 1.3037. The long-term regression channel has turned upward, but the downtrend remains intact on the daily timeframe. The CCI technical indicator recently not re-entered overbought or oversold territory. USD GBP currency pair maintains a medium-term downward trend while a weak correction continues on the 4-hour chart. This correction could end any time, as the market still refuses to buy the dollar. We continue to avoid long positions, as the current upward movement appears to be a daily correction that has grown into an illogical rally. However, if you trade purely on technical signals, long positions are currently valid with targets at 1.3037 and 1.3062, provided the price remains above the moving average line It's a sine line on the graphic. Sell orders remain attractive with targets at 1.2207 and 21.46. Sooner or later, the upward correction on the daily chart will end. The pound remains extremely overbought and expensive, and Donald Trump won't be able to devalue the dollar indefinitely. However, it is very difficult to predict how long the dollar will continue to fall due to the Trump's risk. That's all for today. Wish you best of luck.